Hey option traders, it's Mikey, and this week we'll take another quick look at the gold market, where we're seeing some decent opportunities for affordable call options on the price of gold. With inflation still a big deal, fears of a recession, and the impending deadline with the US debt ceiling, there might be an opportunity here for those of us seeing bullish fundamentals on gold. But as usual, let me pour myself a drink before we begin. So as we discussed in the last video, there are a lot of concerns about the American debt ceiling, which has a deadline coming up in June. We have a lot of political drama going on right now, so a simple agreement between politicians in America to raise the debt ceiling is likely only going to happen at the very last minute. See my last video to get some more details on this. Oh, and by the way, remember to like, share, and subscribe to my channel, as it really helps the channel grow. Now, where were we? Yes, economic uncertainty. So, in addition to the concerns over the US reaching its debt limit and possibly defaulting on payments in a not-too-distant future, we got the added issue of inflation. Now, the relationship between inflation and the price of gold is complex. There are a variety of factors that can influence it. But in general, when inflation is high, the purchasing power of currency declines, which can lead to a rise in the demand for assets perceived as more stable. Gold is one such asset. Next up, we have the expectations of a coming recession in 2023. Here as well, the relationship between a recession and the price of gold is generally positive, as gold is seen as a safe haven asset that can hold its value during times of economic uncertainty. Remember, in all of the cases discussed here, gold can be a useful tool for economic crisis, inflation, or recession hedging, but it is not a perfect solution. Now, if we feel that these pressures are going to be driving the price of gold upwards, then one might consider the prospect of buying call options on something that tracks the price of gold. One such security is GLD. We talked about this in my last video. Now, if you're brand new to the option game, you might have heard of call and put options. We'll be looking at call options in this video. If you want a detailed introduction with tons of examples how to use call and put options from the starting point of view, feel free to click on the course link in the description below or in the comments. Alright, let's get to it. So as you can see, over the past few months, the price of gold, and as a result, the price of GLD, has been trending upward. Keep in mind all the things we just talked about. We might be interested in a call option with an expiration date sometime before June, just to make sure it's not too expensive to buy. Furthermore, most of the panic that's likely to come regarding the whole US debt ceiling crisis is going to be hottest right before June, when the actual deadline is. Alright, so let's get to it. Let's see what kind of options are available. There's a lot of upward pressure right now, and this includes the recent bank failure that happened in California for that venture capitalist bank. So there's a lot of pressure pushing this up. I don't think I need that much time to get in and get out with some reasonably decent profit. I'm thinking maybe 5 to 6 weeks would give me what I need. And I'm thinking something close to the money. Maybe strike 174. So I see this. So for about 400 bucks, I'd be able to have a position there. Let's go look at some price history on this option. Just a few weeks ago, this thing was over $1,000. I see some panic and pressure pushing it back up. I think I can get around $600 exit point, and that's what I'm thinking I'll choose. So we're looking at a GLD April 2023 option, call option at strike 174. Guys, It's been a slice. Thanks for joining me on the channel this week. Please remember to like, subscribe, and share the video to help the channel grow. Take care of yourself, be good to yourself, and I'll see you next week.